of sugar prices, which are now sitting at year high level. Let's understand that better with Mr. Atul Chaturvedi, the Executive Chairman, Shree Renuka Sugars, joins us on the show now. Mr. Chaturvedi, hi, good morning. Season's greetings to you, and thank you so much for making time and speaking with us. Let's start with sugar prices itself. 6-year high level when it comes to the global sugar prices. What's your expectation for 2023? Do you expect the prices to remain firm?
No, as far as the first quarter of next year, 23, is concerned, we feel the markets could remain fairly well supported. And the reason is that Brazil is practically stock out, and their stock levels, as far as raw sugar is concerned, are pretty low, and which is impacting the world markets. Secondly, exports from India, though India is supposed to be exporting close to about 6 million tons, physical exports have been relatively slow, and that was largely because the prices were getting renegotiated and uh, the delays were there in physical shipments. So that is also keeping the international prices on the boil. But having said that, Indian domestic values continue to remain range bound. And because Indian sugar industry this year is also probably going to be crushing practically the same level or marginally higher compared to last year. So sugar availability domestically will no longer be an issue as far as, and the pricing also should remain relatively muted. But post April, we feel that the world values could come under slight pressure with Brazilian crops coming into play. So that should keep the prices relatively in check. But all this, uh, we will have to closely watch how China behaves, because China suddenly is now opening up its economy. Once that happens, it is all bullish news for the commodity sector and sugar as well. So that is what our take is as far as the next year is concerned. So sugar prices worldwide should remain friendly, and India also prices should remain relatively friendly.
So that's the comprehensive insight coming in of how the sugar prices are likely to be in 2023, but also wanted to get a sense as far as ethanol prices are concerned, because there are reports that suggest that OMCs are likely to revise the ethanol prices higher. What's your own expectation? What's been the conversation like with your clients and players?
No, we really are not aware whether the OMCs are actually jacking up the prices, but the fact remains that the industry has been demanding close to about 69 rupees per liter for cane juice ethanol, which the government or the OMCs had placed it at around 65 rupees. So there's still a gap between the demand of the industry and what has been given of almost 4 rupees liter. And with international prices being firm and sugar also making its way into the international market from India, we feel sooner or later the OMCs uh, should increase the prices to maintain the same level of interest in expanding the capacity and availability of ethanol going forward. As far as sugar or cane production in the country is concerned, we see no reason why it would come down, for the simple reason that the farmers are getting one of the best returns from cane compared to competing crops. So cane availability will keep on increasing, and government's target of 20% of blending by 2025 can only be met with higher allocation or higher receipt from the sugar sector, because the grain sector, from which they were expecting about 4.6 billion liters of ethanol, that seems to be lagging a little. So the government will have to increase its requirement from the sugar sector, which currently is placed at about 5.5 billion liters by 2025. So we feel there is scope for increasing that requirement from the sugar sector. And sugar sector has the requisite ecosystem in place. So ramping up the capacity as far as uh, sugar-based ethanol is concerned should not be too much of an issue. Yeah.
Chaturvedi, hi there, morning. And
Thank you.
given the fact that the government has set that 12% ethanol blending target for the next season, how confident are you that the target of 20% ethanol blending will be achieved by 2025, and any growth levers in motion for this?
Now, I'm 100% sure that as far as the target of 5.5 billion liters by 2025 from the sugar sector would be 100% achieved. And I would not be too surprised if by next year itself, the sugar based ethanol might actually be almost 5.5 billion liters. But I'm not too hopeful of grain sector contributing 4.6 billion liters to achieve about 10.16 billion liters for achieving 20% blending. So probably government will have to tweak their targets a bit and demand more from the sugar sector, which I'm sure is quite capable of filling in the gap. So
Okay.
there's no reason why we will not achieve 12% blending next year. I would not be surprised if in some states we may actually cross 12% blending because government has already issued the notification, enabling notification for blending up to 20%. So maybe in some states you might see that 20% target is comfortably breached.
Fair enough. So you're confident when it comes to ethanol blending. Now, talking about the company specifically, there were plans to double your capacity by FY23. What are the are these capacity expansion plans on track? And once this is in place, how will this help your overall growth profile shaping up?
Now, our current existing capacity is about 720 kiloliters per day. But as we are running it on cane juice, so we are able to achieve close to about 900 kiloliters per day currently. And by end of January, our expanded capacity of about 1250 KL per day would come into play. So the full impact of the expanded capacity will probably be coming in the next year, but definitely even this year, our ethanol production and sales is going to be higher by minimum 25% compared to what it was last year. So we are on track, and as far as our plans are concerned, we are more or less on track. And we keep looking for opportunities because ethanol is, as a company, we are punting big time on ethanol because we feel this is a winner. It makes sense for government, it makes sense for uh, farmers, it makes sense for all the stakeholders. And it improves the cash flows of the sugar companies. And now you don't hear the issues of cane dues and things like that. That is all now becoming part of history now. Yeah.
Point is taken, but sir, given the fact that you are, embarking on this capital expansion plan as well, on the balance sheet side, the debt is a tad bit on the heavier side. What's the, plan with respect to debt reduction? Are you looking at maybe some sort of equity fundraise, QIP, etc., to balance that out?
No, definitely we've had legacy issues in terms of a higher debt, which cannot be denied. And we've pruned the debt quite a lot in the last few years. And definitely we keep looking at various options of bringing down the debt. Obviously, whatever you've spoken, all that comes into play. And we are sure that in the next year or so, we'll be able to prune our debt significantly.
Also wanted to understand, as far as your EBITDA margin is concerned, it seems that it's a lot less versus your peers. It stands at what? Higher single digits as compared to the other peers, which are, let's say, in teens or high teens levels. Is there any expectation as far as the margin improvement is concerned? And also a word as far as your, organized sugar brand is concerned, Madhur, what kind of, target market share are you, looking at when it comes to that particular segment?
Now, as far as Madhur is concerned, Madhur is the clear market leader in the country. And we had got a survey done by Euromonitor. And according to them, we control almost something like 32% of the branded sugar segment in the country. And the growth of Madhur year on year is about 25% per annum. So Madhur is on track, and we feel that uh, consumers are becoming that much more conscious as far as quality and as far as health issues are concerned. So, in fact, our tagline as far as Madhur is concerned, lose nahi, Madhur sahi. So, this is what we say, and we tell the consumers to stop buying loose sugar. It is much better to buy branded sugar or packed sugar. So, that is having a traction. I didn't get your second question or the first question right. You're talking in terms of lower margin as far as Renuka is concerned. Is that what you're
Yes, lower
talking about?
margins for Shree Renuka as compared to your peers.
No, as far as our margins are concerned, I see no reason why our margins are low. Our margins are good. The only problem is that because we have a higher debt, till EBITDA level, we may probably be one of the top companies in the country. But the moment you move below EBITDA, that's because of the higher interest burden, that has an impact. But going forward, I'm sure this issue will definitely get resolved, and we are working on it very, very seriously.
All right. Thank you so much then for giving us an overview of the sector as a whole as well as for Shree Renuka Sugars in particular.